Welcome to video number 7 for Emoji Trading. My name's Lee Harris, and over the past couple of videos we've started to describe the market in terms of supply and demand, and hopefully by now you're building faith in reading the market simply by interpreting the volume that has been traded, and you can see that trading using slow, lagging, arbitrary price-based indicators such as moving averages and momentum is best left to that large pool of retail traders that never even consider the importance of volume within the market. A favourite quote of mine comes from Jim Dalton, the author of several popular market profile books. He describes price as an advertising mechanism. I find this an extremely important concept to remember. By detaching ourselves from applying importance to price and concentrating on volume, or in other words, the popularity of price levels, we can make much better informed trading decisions. Let's once again recall the basics of supply and demand. As prices rise, demand falls, and as prices fall, supply falls. No one wants to sell at a low price. If we take this logic to its natural conclusion, there is some price level above which it is so unattractive to buyers that nobody will buy. Likewise, there is some price level that is regarded by sellers as too cheap to sell and nobody will sell. We see these price levels at the top of price bars where zero quantity hit the bid, or in other words, there were no passive buyers prepared to buy. There was no market. Price was too high for buyers to buy. Likewise, at the bottom of price bars, if the ask quantity is zero, this tells us that there were no sellers making contracts available to purchase at the market at these prices. Price was too low for sellers to be prepared to sell. Within Jim Dalton's writings on market profile, the movement or the rotations of price up and down are referred to as an auction, and by considering price as an advertising mechanism, this is a really appropriate description. The market explores, or auctions, at price levels to discover areas where buying and selling can occur, and this is how a market becomes established as a market. If the market is moving upwards and we do not encounter a price high enough for nobody to buy, in other words we see that volume traded on the bid and on the offer, this is referred to as an unfinished auction or unfinished business. The idea of this is that during the price rotation auction, a price was not discovered that was sufficiently unattractive for no one to trade, hence the auction process is unfinished. The market rotates up and down as buyers and sellers look for price levels at which they can do business together. A price with unfinished business represents a price level beyond which it is unknown whether or not business can occur. The price discovery process makes it likely that at some point in the near future, the market will auction to this level to discover whether in fact business can occur. What this means to us as traders in simple terms is that if we see a price level where there was unfinished business, we can expect price to revisit this level at some point in the near future. The level acts like a magnet attracting trade in order to determine whether trade can actually occur at or beyond this level. If the unfinished business has occurred at a significant level in the market, for example at a high or a low, then this likelihood of price revisiting in the near future can be even stronger, and the unfinished business price level can be considered for trading opportunities both as a target or as a potential reversal point. The Emoji Unfinished Business Indicator makes it really easy to spot these price levels. When a bar closes, an unfinished business price level is highlighted and can optionally be extended with a forward projection zone and an extension line that will remain in place until price next trades at this level. Other inputs allow filtering of highs and lows over a look-back period, so that we only consider unfinished auctions at prices which are higher than recent highs or lower than recent lows. When we encounter an unfinished business condition and price retreats away, then we can be on the lookout for entry opportunities to trade the retest of this level, and we can also be thinking about what we do when this level is retested. Is price going to continue, or perhaps it may reverse? Under certain trading conditions, this is one of my personal favourite trade setups, and we're going to cover more about this and other trade setups in video number 10. So now we're at a point in this video series where we've covered many of the indicators within the emoji trading order flow suite using a framework of looking at traded volume, examining delta, how we understand buying and selling power, seeing the actions of large traders, looking at the market's reaction to the actions of large traders, looking at exhaustion, the situation where we run out of supply or demand, other indications of supply and demand, for example, thin spots, and in this video, unfinished business, price levels which may be likely to be visited as the market did not run out of buyers or sellers at these prices. The Emoji Trading Order Flow Suite runs on Sierra Chart, and it consists of more than 25 indicators that help you to visualize these concepts to make quicker and more informed trading decisions. We offer these in various combinations and on various licensing terms, including subscription and also lifetime access. You can learn more at www.emojitrading.com, and please do get in touch if you've got any queries about our indicators, their application or interpretation. Now that we've introduced the rationale behind our indicators and demonstrated some of them in use, the remaining 3 videos in this series are going to cover examples of how to apply emoji indicators in day-to-day trading, some general usage and interpretation tips, and also some demonstrations of trade setups. See you then.